Hello, in this video we are going to cover deposits and deposits in the context of mortgages. So I've got a video covering what is a mortgage, so I recommend that you check out that video. But a mortgage is a loan for property, simply put. And if you want to get a house, you want to get, let's say, this fancy house right here. Can tell I took art at school and clearly got the highest grade in the class. And I want to buy this house. And let's say it costs £500,000. I can't just go to a bank and ask for the full amount. There was a time you could actually have 0% down mortgages. That didn't work out well. Feel free to check out the 2008 financial crisis. Google that. In the future, I'm gonna have a video covering that. Actually, probably a bunch of videos covering that whole fiasco. But what they'll ask for is a deposit. So that's where this comes in, and it's usually referred to as a percentage. And 10% is what the banks will probably, for the most part, minimum want, and 15/20% is considered good for most buyers. There are some times 5% deposit schemes available, and that's usually where the government will, probably add the extra, let's say 10-20%, and is to help first time buyers. These usually aren't available to second time or third time buyers, and so you would have to get one of these if you are buying, let's say, a second house or an additional house, maybe to rent out, for example. So in this case, if you had £500,000 or you want to buy a £500,000 property and you did 5%, it would be 5% of 500,000, which literally is 500,000 times by either 5% or 0.05. Because the way to convert percent to a decimal is you just divide it by 100, which equals 0.05. And that in this scenario is £25,000. So that'll be £25,000. Let's cover it with 10%. That is £50,000. 15% is £75,000. 20% is £100,000. And you can go above 15-20%. That's just usually what most people at best could stretch to, and you could go 40%, 50%, even 60% if you really wanted to. There's really not that much of a limit, I guess, but most of the time you're doing it because you don't actually have that much money in cash, and therefore you need a mortgage, so you put a deposit down. You might be thinking, okay, in this scenario, this one clearly requires more money, so that's the amount of money you need in cash in your bank. They generally don't accept just cash, under your bed in your bank, and this is the lowest. Why would I just not go for this one? So there's one main reason. The lower the deposit, the higher the interest rate. So the higher the interest rate, so that would lead to a higher interest rate, whereas this right here would lead to a lower interest rate. So the higher the deposit, the lower the interest rate, therefore less monthly payments you are making. Also, less money you are paying overall, because there is interest on that mortgage. You aren't just paying, in this scenario, £500,000. You'll be paying a lot more because of the interest. So that's really all a deposit is. So deposit is usually referred to as a percentage. You can easily calculate it. If you have any questions, feel free to pop me a message. And as usual, I look forward to seeing you in the next video.